All right, welcome back to another video. Today we're going to talk about rental property bridge loans, what they are, the use cases, and how you could benefit from them if you're in a situation that requires that. So first things first, what is a bridge loan? A bridge loan, as kind of the name implies, is it gets you from point A to point B, and in this case, typically a bridge loan is used to take you from a point of distress to permanent financing. Now, I'd like to unpack that a little bit. So the distress doesn't necessarily have to be that the property is in bad condition, your credit's bad. It could simply be like, I need a quick close, the seller's moving, they need the money to close on another house. Whatever the case is, if you're in a jam, a bridge loan is typically the right solution. Bridge loans are designed to be short-term debt, and with that, the underwriting is usually less cumbersome than if you were to get into permanent financing. Okay, so when are some of the cases when you need or when you'd want to use a bridge loan? So quick closing, property needs to be repaired. Even on so quick closing would be like a purchase, but if let's say you're in like a let's say you're in like a foreclosure situation, you're falling behind and you need more money for construction, rehab, those types of scenarios are when you would typically look to lenders for short-term bridge financing. What can you expect for bridge financing? So the tolerance for risk for lenders varies, but typically they're going to want to, even if your credit score doesn't matter, they're going to want to clearly understand the issue. What is going on? What is the point of distress? And then clearly understanding the exit or the solution. A lot of time people will try to reposition debt without understanding how they're going to get out of the bridge loan. Like we said at the beginning, a bridge loan is a short-term loan, 12, 18, 24 months. Terms we can go higher too, but that's typically the time frame that the distress exists, or that we underwrite the distress to exist. So we want to understand the exit, right? So a hypothetical would be, let's say you got like a 450 FICO, and you tell us that your plan is going to be to refinance. Well, if you could refinance with a 450 FICO into like long-term debt, you would probably do that, right? Because it's cheaper and it's stabilized. If the only issue is your credit, we're going to want to understand how are you going to fix that. So in 12 months, you can go to you can come back to us for a 30-year loan or go to the bank or whatever you decide to do. But just saying like, hey, this is my plan. If the circumstances today don't support the plan for like a low credit score, we would want to understand how you're going to remedy that. And that's when we might like dig into your credit a little bit and say, okay, maybe it's a couple collections, or maybe utilization is super high, or whatever the case is. We want to make a reasoned decision to ensure that your plan is successful, because again, what you don't want to use a bridge for is to get out of the problem and then the problem still exists 12 months later. So again, taking a reasoned approach. Let's say another scenario is that the property needs to be fixed to sell, but you have some cash. Okay, so obviously, right, in that scenario, if we give you the money to fix the property, then the solution is evident. Whether or not you refinance or sell is up to you. But if your plan is to list it on the market and the bridge loan fixes the problem, then the line of sight to the end is pretty easy. So that's a scenario that makes sense for a bridge loan. And you're not going to get much pushback on that, if you get rehab financing or have the liquidity to do the rehab. You just need, debt to cover the acquisition or, current lender that's on the property. Now, one of the things that's come up, unfortunately, is there's a lot of foreclosure bailout requests and stuff like that. So a bridge loan is a good scenario for that. Most long-term lenders aren't going to lend on a property that's actively in foreclosure. So, you can expect to go get a bridge loan if you need a foreclosure bail. Let's say, ran behind on payments, your tenant bailed, they stopped paying rent, whatever the jam is, to where you couldn't make the payments. Typically if there's equity in the property, I mean, you've got, I'd say like 35 to 45% equity in the property, we can safely come in, take over that debt, maybe even give you a little bit of money at close to fix the scenario. Again, that's a scenario where it's like, hey, I'm either going to sell this or I got a tenant coming in. Again, line of sight to the end, to the solution is what makes sense, right? Repositioning this debt into other debt without actually a clear solution to the problem isn't going to work out, and it never does. So, tenant issues, maybe the illness, like whatever the case is, as long as the bridge fixes the problem, or conceivably will fix the problem, then you're fine to do this type of loan. Leverage, I'll say it like this. Leverage is always based on risk assessment. So we look at everything to see what we want to do, right? But I would say for, a clean, and then another thing that's very popular in the bridge loan space is doing refinances to pull your equity out while listing the property. Okay, so in that particular case, we're doing a lot of those where investors, stuff's sitting on the market for longer than they want, and therefore they want to pull their equity out so they can keep investing while the property sits. This is good for realtors if your client has a property sitting on the market and you want to keep the listing and provide them with a temporary solution to, again, get the distress, right? The distress here is, hey, the property's sitting, I need to pull out some money. We're going to continue to list the property, lower the purchase price over time, blah, blah, blah. You can do a bridge loan on that. So that's a more common scenario we're seeing is refinancing these properties that are sitting on the market after they've been rehabbed, just so that the investor can keep moving and they don't have to have their equity locked up in the property. So that's kind of, that's an overview. We've been going for about 7 minutes now. That's an overview of like what bridge loans are. I'm sure there are questions I didn't answer. So if you have one, either call our office or leave it in the comments. I will address it. But bridge loans are it's a Band-Aid to fix a solution, but also provide you the guidance to get out of that problem too. If you have any questions, call us. See ya.